hello, Maverick traders. Welcome out to your currency recap, October 30th. Corey here with you. Let's jump in and have some fun. So we're going to look at the markets and what news is out there that's causing things to move in the commodity space and the equity space and the currency space. There are always some opportunities. As they say, there's always a bull market and a bear market somewhere. We're going to look at the top-down approach, what currency baskets tell us about which currencies should outperform and which should underperform. And then we always try to highlight our very best ideas. All right, so as we break down the markets, this is not a really exciting velocity market. There's not a ton that's flying around and has a clear path, but obviously cryptocurrencies outperforming a lot of things more in this sideways range. Now, oil has come off quite a bit. We've been lovers of energy, lovers of commodities, lovers of gold and silver and so on. And I've referenced this. I still think it's true that right now the better place is in precious metals. And we'll look at some of those charts together. So as we look at market performance and where things are moving, a little bit of interest in the gold markets. And the currency that's most related to that would be the Australian dollar. But it's not a perfect correlation. Can the Australian dollar outperform CAD and Kiwi? Well, not only is it happening of late, I think it continues. We had a bit of a false breakdown in equities, and we'll touch on that chart. I think this makes perfect sense. It's kind of that knife that falls, temporary slices through support to trigger stop losses, to really get the weak hands to give up and throw in the towel, and then the market recovers. And I think that's the next phase. I actually think there's a nice rally. So I've been quite pessimistic on stocks and equities. Now I'm a little optimistic. Seasonality also points to the same. We've passed that worst period for the equity markets. This is where we get into the sweet spot. Post the old saying, sell in May and go away for stocks, means that you come back basically at Halloween time, and then there's a nice end of year rally. So we've gone through the tough part. Seasonality, September and October are the tough area for markets. Most market crashes, most downturn happen in that September and October time period for whatever reason. This year was no different. Equities got hit hard during that period of time. So for today, we had Australian dollar as an outperformer. We had USD and Swiss franc underperforming. Tonight, we get a Bank of Japan meeting. It's flat on the day. As we look at other markets, oil has come off. Now, it's interesting. Every year we do a full year forecast, and Rob and I had a little bit of a friendly wager going. I said I thought oil would be up on the year. He thought it would be negative. It's been up most of the year. It's coming off here late year. And if this is like those bad beats, right? You're right for 10 months out of the year, and then all of a sudden at the very end, it falls against you. I may owe him dinner if oil continues to go down like this and turns negative for the calendar year. But we still got 2 months left, so I'm not there yet, even though oil has been up for most of the year. Bitcoin Cash, coming off a little bit, but they're just really in more of a consolidation following a big run higher. As we look at equities, the slope is down, the price action is below the moving averages, so everything should be bad, everything should be negative, right? Well, not so quick. And here's my thesis on this. So when you're looking at charting, a couple of things to pay attention to. Just because you're in a downtrend doesn't make all downtrends equal. look at how extended away we are from the moving averages. So we've really gotten over extended potentially, and there should be some mean reversion, right? You get extended and you kind of bounce back towards. You get extended and there's a mean reversion. You get extended, we probably have some mean reversion. Here's what I was looking at. This long-term chart, you can see these levels back here that basically had been some area of resistance, some struggle zone. Then we cleared and broke out from there. When we came back down, this is that little false move that I was talking about. It was my thesis that we would poke our head down there for a couple of days, really wipe out the stop losses and those that were holding on and hoping that support would hold, kind of wipes them out before the bounce back. And I think there's a good sized, a decent sized rally coming, and it shouldn't just be a one-day event. So will there be, some choppiness, up day, down day? Yes, but over the next couple of weeks, make no mistake, I expect a recovery. Again, September and October are usually a bad time for stocks. Well, that was very true. Here's September into October. It was an ugly 2 months. Now we get some mean reversion. My initial thought would be at least a pushback up here towards 4,300. It's about 5% higher in stocks. Now, this week, pretty busy. Bank of Japan meeting tonight. Now, the Bank of Japan has been doing some things to tweak their interest rates, right? There's basically inverted yield curves and all these yield curve things happening around the world. Japan has had a real impact on treasuries. It's not as popular to talk about Japan. For whatever reason here in the US, we always talk about China as if China is the major holder of treasuries. No, Japan, they're far more impactful, way more impactful on US treasuries and where interest rates are than China is. So that can move a few different markets here based on what they say. And I've been long in the saying that you need to be careful when you're trading the Japanese yen. It's just an area where they are manipulating, they are in there actively doing things, and that always creates an added element of risk. Now, Wednesday, we get the Fed meeting. The Fed is expected to be on hold and keep rates at 5.5. They'll have their statement. They'll have their press conference. They are data dependent. They might be pushing they're taking their foot off the brake and basically saying, okay, we're not going to slow things down any further in the economy. We might be holding steady here at 5.5. It'll be interesting to see. Inflation has ticked back up recently. We've got the Bank of England on Thursday morning. We've got non-farm payrolls, the payrolls report on Friday. So plenty to keep us busy. A lot of central bank meetings, a lot of things happening. Today's the quiet day, and then it picks up from tonight in the Bank of Japan meeting. Usually those are a snoozer, but I do have to tell you, because they're doing things to manipulate the yield curves and whatnot, active. Remember the Fed's mandate, keep full employment, keep price stability. Well, over in Japan, they'll do some similar type of things, and they'll be actively in there with their currency markets, with trying to manipulate the interest rates of long-term duration, short-term duration yields, and they can do that through actual purchasing or actual selling of different things. In the US, we had one that was called Operation Twist, where the Fed was actively doing things, buying one time period, selling another to try to manipulate those curves. So the Bank of Japan is actively doing that as we speak. Now, possible trades. I think the euro's still in a good spot to go higher. We recently had pushed higher. We pulled back a little bit. I think we're going to fast forward, and I've been on record saying I like the euro here. I think I still like the euro to work its way back up towards the upper end of this range. In price action, you often see these rounded formations. And so this was the big resistance. We should head back up for a retest. It's like a magnetic pole. Expect the euro to be a better performer here for the next couple of weeks. Japanese yen is trying to move out of what was a downward phase for it. You can see a little bit of a push that's stronger here to get above the 50 MA. That has kept a cap on the Japanese yen over and over and over and over again. Now we're actually clearing that. Can we make some headway to the upside? Again, based on what they're doing and some of the changes, I do think the Japanese yen should continue to work its way higher. The euro is the more obvious bet. The Japanese yen is more of a power reversal type of dynamic. So look to buy the dips maybe, look to trade when the best opportunities arise. For the rest of this week, we're going to have currency updates. We'll have updates on different things that we see throughout the week and different changes that the Fed and other central banks are making. I hope you enjoyed this currency recap video. We'll see you next time.